Hello, hello, Jamie here. So we are going to be talking about a lot of stuff today, so I'm going to get started pretty quickly. Really quickly, I'm Jamie Troll, financial literacy coach and profit strategist. I'm going live right now on my YouTube channel. Make sure to subscribe so you can get all the updates on all of these things because they are moving really, really fast, and I do continuously update my YouTube channel. Also, if you are watching me over in my Financial Literacy for Women Business Owners Facebook group, hey to my friends over there. And this is also on my Facebook business page. So wherever you're watching me from, say hi, tell me that you're here so that I know that you can hear me. And so today, the topic that we're going to be talking about is taxability of all these stimulus funds. So there have been all different kinds of funds you may have gotten, and you're probably wondering, what is taxable? And let me tell you right now, this is one of the things that there's so much misinformation out there about, which is why I wanted to do this live today. Because and part of the reason I think is because rules have changed so quickly that even things that were true 2 months ago are not true today. So we need to constantly be watching what's happening, and we need to be paying attention to what's going on, which is what I want to bring to you today. And of course, I made a flowchart because that makes things easier for me. I'm a flowchart person, so I'll show that here in a minute. Hi guys, I see Facebook user, I see Cheryl with an E. Cheryl is part of my financial fitness formula, and so is Mark. Hey Mark, awesome. I like seeing you guys here today. So let's talk really quickly because some of you guys may be coming here and wondering about the new changes to PPP that were just announced on Monday by the current administration. Right now, not a ton is known. There's a lot of specifics we don't know, so I'm not going to get into that today. I'm going to be back on Friday at 1:30 p.m. and I will be taking all of your questions about that, and we'll be updating you on all of those things on Friday. But as of right now, again, come on over to my Financial Literacy for Women Business Owners group. Check the announcements. You'll see, if you don't know what I'm talking about with the changes to PPP, it's at the top. It's pinned to the top of the page under announcements. So go check over there so that you can see what's going on, and I'll take questions and give you more updates on Friday. Today, though, we're going to talk about taxability of PPP, EIDL, EIDL advances, unemployment, any other grants you might have gotten, stimulus checks, right? Any tax credits. We're gonna talk about all of that. So that's a lot to talk about. So I'm gonna go ahead and get started. All right. So really quickly, I'm gonna put this up, and don't get lost in this. I will share this into the group. So I'm going to put a screen print of this into the group after this talk, where you can actually take this and have this for yourself so that you can read it a little bit better. But I've gone through basically business loans, unemployment, business grants, and tax credits, and talked about the differences and how they are impacted from a tax perspective. So you will be able to grab this if you are in my group. If you're not in my group, go to jamietroll.com/group and make sure to enter in all your information, and we'll let you into the group and you'll be able to grab this. But before we even get to that, let me take this down because I don't want to distract you guys. Before we even get into that, I want to talk a little bit about PPP. So PPP is one of those that is going to it's a little bit challenging, and the rules have continuously changed. So I'm going to tell you where we are today. I'm recording this on February 24th, 2021. I think this is where we're going to end up. And so definitely be paying attention to this. So PPP, before it's forgiven, is just like any other loan. So if you have not had your loan forgiven, then it's just like any other loan at the end of the year 2020, meaning it's going to show up on your balance sheet, okay? So what that means is it's a payable. It's not income. Only income and expenses show up on your P&L. That's all you're going to claim for taxes. So a loan is never going to be something that is considered income. So that's really important because I think some people are thinking that it's taxable, like that the tax treatment changes, and it somewhat does, depending on whether it's forgiven or not. But ultimately, whenever you get it forgiven, it's going to follow the rules that I'm going to go over here in a minute. But before it's forgiven, it's a loan on your balance sheet. So there's no tax impact to that. Once you start making payments on that loan, just like any other loan, the interest part will be deductible as an expense. But overall, it is not considered a income when you get a loan. Just like when you pay the principal of that loan back, it's not considered an expense for tax purposes. So that's just important to know. Okay, so now that's true again about any loan. So if you've gotten other business loans through this that are loans, that are things that you have to pay back, there is no impact on your taxes to that outside of potentially interest that you're paying that can be deductible. All right, so that's just important. It's going to be a balance sheet. It's not income to you. Okay, so that's kind of the first section here that I just walked through, which is on business loans. So that's how loans work. That's really clear. There's, generally loans are not going to be taxable things. Now, I'm going to skip unemployment and I'm going to come over to business grants because it's more related. We'll come back to unemployment in a minute. So for business grants includes forgiven PPP. Basically, once PPP is forgiven, that portion that's forgiven, which is hopefully all of it, becomes essentially a grant, right? They've now given you this money. It's been converted from a loan to a grant. So you're going to take it off your balance sheet. It does go on your profit and loss, but you're going to want to put it in a separate account that's an other income type of account. And I would even classify it as other non-taxable income. So once your PPP is forgiven, it is non-taxable. It is income, but it's non-taxable income from a federal perspective. And this is where it gets confusing, okay? Because previously, we knew it wasn't going to be considered income, but the old rules were such that, and I'm talking federally, we'll talk about state here in a minute, but the old federal rules for your federal tax return were that, yes, PPP itself wasn't income, but you couldn't then deduct any expenses that you paid with it, which, by the way, basically gets you back to the exact same place for the most part, right? That if you can't deduct the expenses, it's almost like the PPP was income to begin with. Well, that was something that was an IRS ruling. It was something that the IRS decided that they were going to basically not allow you to deduct the expenses. And then in the act that was passed on December 27th, kind of that next stimulus big bill that changed a lot of things, one of the things that it changed was to say, no, IRS, that was not the intent of Congress. The intent of Congress when they passed the CARES Act was that this was non-taxable fully, not like some weird backdoor tax thing, that it was non-taxable. So that changed in December. So you may be finding old articles that are still telling you that those expenses aren't deductible. Always, when you're reading an article about any of this, check the date. Because if you're reading an article right now about any of this stuff and it's from June of 2020, don't pay any attention to it. Come here and get the most updated advice. Also, every Friday I do a Q&A. So if you go to my YouTube channel, you can see all the Q&As. You can go to the most recent one from last Friday and get kind of the updates where we stand today. So if you're always wondering, like, where are things? I haven't been paying attention to all the moving parts. That's always a great place to go, is to that Q&A where I give you that update. So what that means is federally non-taxable, yay. Like, that is a win. State-wise, some states will tax this income. Now remember, important to remember, state tax percentages are significantly less than your federal tax percentages. So by a state taxing it, it's still not going to be a significant amount likely. Some states more than others, of course, depending on state tax rates. But overall, state tax rates are usually under 5%, probably effective tax rate. So it's not like federally where it could be 25%, 30%, right? So that's kind of the plus side, is that if it's taxed by the state, it's annoying, but hopefully it won't be as impactful as if it was federally taxable. About half of states are not taxing this. So they've basically followed they've conformed with the federal rules that say it's not going to be taxable. Some states have not conformed, and some states, that haven't conformed may still pass a bill that conforms later. So what I'm going to show you in a minute how you can tell how your state is currently looking at it. But I want to tell you that if your state right now is one of those that's saying that it's probably going to be taxed, give it a month. Give it a month. Let it kind of figure out what's happening. Maybe do all the work on your tax return, and you can potentially even just hold off on filing it in case it changes, because there are some bills out there in a decent number of states that would conform this. So let me show you really quickly. And I've linked this article above as well. So this is in the notes of this live. You will see this article. And this is an article from Tax Foundation that basically talks about how this is being treated from a state perspective. So what do these colors mean? If you are in one that's kind of that teal color, you're good. Your state is not taxing it either. So your forgiven PPP is not taxed state or federally. Now, if some of you haven't gotten your PPP forgiven and it's a loan still right now, remember, when it does get forgiven, these rules are going to apply. So it may not be until you file for 2021, but eventually when that PPP is forgiven, which hopefully it will be, these are the rules you're going to be under. But again, things are changing. So right now, teal, you're good. Yay, woohoo. If you're kind of in that orangey yellow color, you're actually probably going to be in a position where this gets taxed. But again, it could change, okay? It could change. And then the ones that are in gray have no income tax at all anyway, so you don't really have to worry about it if you're in Wyoming or South Dakota. Now, let's come down here, because when these orange states say it's taxed, there are two different ways that could happen. It could either be that the PPP, once forgiven, becomes income, i.e. it goes in that kind of revenue line, right, on your tax return. Or it could be that it's not income, but you can't deduct the expenses. Ultimately, in most cases, you're going to end up in a similar place. Not all cases, though, but in most cases, you're going to end up in a similar place. So how you know which it is? Well, whoever you're using to file your taxes should be able to help you with that. And also, if you're using a software, they should be able to also have these rules programmed in there. But here's kind of the table. So it says it excludes from taxable income and allows the expense. So in Alabama, it's not taxable income, and it also allows the expense deduction. So if both of these are checked, that means you're one of these teal states, basically. If only one is checked, you're one of these orange states, and you can see the difference. Either it's excluded from taxable income. So in Arizona, it is, they allow the expense deduction, but it's considered taxable income. So that's how you can kind of go down here and tell. But like I said, this is changing. So the question that people are asking, right, is, well, why are some states doing this differently, right? Why are some states, handling this differently? And I see you guys asking this question. I have the exact same question. I'm guessing the reason that they've made these orange, I'm not sure, because Florida doesn't have a state income tax, right? And yet they're still taxing it. There must be some other tax that they're assessing potentially on this. I'm not sure. I haven't looked to see the details specifically on this. But that is something to keep in mind if you're in one of those states that's, that doesn't have a state income tax and yet you're orange. I don't know. You'll have to look up. There might be something specific going on with that state that made it so. But what I want to mention here, and I'm going to take this off. Well, I'll leave it up, I guess, so that you guys can look at it. But what I want to mention here is, why are states doing this differently? Is it just to annoy us? One might think so. But really, what's happening here is some states have a tax statute that automatically conforms with whatever happens federally. Meaning, when the federal tax statutes change, so do the states, right? So it's automatic. They don't have to do anything. They don't have to pass a bill or a resolution or anything. It just automatically happens. So when the December 27th changes happened, a lot of states that do kind of just automatic conformity, right? Rolling conformity, I believe is what it's called, that it is an issue, right? So if you do rolling, or it's not an issue, rolling conformity means it's automatically going to be updated. So hopefully then that's a lot of these states and the reason that they're already teal. Now, some states do kind of a different type of conformity where they actually, they kind of conform basically to a specific date, if that makes sense. So, so what that means is it's called static conformity. So they conform with some things, but it's like they conform with the IRS rules as of June 30th, 2020. Well, if they conform with the IRS rules back to June 30th, 2020, then that's not going to have the new changes that were just passed at the end of the year. So that's why you get into this situation where some states just haven't updated the rules. Some just aren't going to update the rules, but some still might, right? Now, of course, states are probably weighing whether it's easier, do they want to conform, which oftentimes is easier, but that can sacrifice revenue for the state. And if they counted on that revenue from this, then they may decide to not conform and actually tax it. Yeah, so this may be it. It may be something like this where there's another tax. If you don't have a state income tax, you may have some other tax that this impacts in some way, which is why it's not orange on here. So that's a really good point. So that's kind of the rules around the states. But I will say, if you're in one of those states, look up what's going on. If there might be a bill enacted right now that they're looking at. I know it's frustrating that all of this is changing on the fly. That's kind of been the story with all of this. It's like it just constant changes make it really hard to make decisions. But most of the changes as they happen, they tend to make things easier, right? It's less likely that by waiting, it's going to get worse. I'll say that. Is it impossible? No, but most of the rules and things changing are because they're finding issues with the way that it currently is. And they are, doing legislation and making changes to make things a little bit easier on people. So by waiting, usually you're gonna be able to be potentially in a better spot, but don't wait too long. So let's go back to that. So that was talking about specifically PPP when it comes to grants, but there's all types of other grants as well. So similarly, the EIDL advance is very similar to how forgiven PPP is treated, from the standpoint that if it's an EIDL advance, this isn't the loan. Remember, loan is not income. The advance is income, but it's non-taxable income as well, and you can deduct expenses federally. States are going to vary. It's probably going to be the same states, I'm guessing, that are going to tax PPP that are also going to tax your EIDL advance, right? Because it's kind of the same rule that's under. And so if they're conforming on the PPP, they're probably also conforming to the IRS standards on the EIDL advance. Maybe not in all cases, but you can probably assume that that's the case. And then, of course, do the work on your tax return to make sure. But that's generally how it's going to be for the EIDL advance. Federally non-taxable, yay. State by state, how it's going to be treated for that. And then other grants, ones that are not specifically called out, that are not part of sort of the federal CARES Act type programs, right? Most of the federal CARES money, grants and things like that are going to be non-taxable federally. Other business grants you got, more than likely are going to be taxable, probably federally and on the state basis, because the default for a grant, if it's a business grant, is that it is taxable income to you as the business owner. So if you've gotten other state grants and things like that, more than likely, those are going to be taxable. You can look up and see if there are special rules. It would be essentially for it to not be taxable, it has to specifically have a state statute that says it's not, or something like that. So that's how it works with business grants. Now let's go to unemployment. Let's come back over here to unemployment. So unemployment, we're talking about regular unemployment. We're talking about PUA. If you're self-employed, you got PUA. And we're talking about that extra federal pandemic unemployment compensation. So it was $600, then it was $300. It's been all kinds of things, but that extra money that you got as well. All of that together is taxable income, not to your business, to you personally. It is taxable income. Okay, so that is something to make sure you're paying attention to. A lot of states, you could opt whether or not you had taxes withheld on that. But I will say some states could only withhold taxes on the state part and not the extra federal. It doesn't mean the extra federal is not taxable though. It just means they didn't have the ability to withhold taxes for you on that, which means you could be looking, if you got unemployment, you could potentially be looking at a tax bill when you file your taxes for that amount, especially if you didn't withhold anything, or if you only withhold on a portion of it. But yes, unemployment is taxable. It is something that you don't want to run through your business. That should not be on your Schedule C or your business tax return at all. That is something that will flow through on your personal tax return and is taxable. Don't put it in your business, because if you do, you might end up inadvertently, accidentally getting taxed twice on it. So I want to make sure that everybody kind of handles that the right way, and don't run that through your business. Okay, so now moving over to tax credits. And these are my favorite, because tax credits are all green, you guys. Tax credits are the best of the best, because it's truly, in all cases, free money. Free money. And let's talk about the difference between a tax credit and a tax deduction. A tax deduction is something that says, okay, I can deduct, when we're doing a tax deduction for, let's say, our business, and we spend money on something, right? Office supplies. That's a tax deduction. So what does that mean? Well, if I spent $10 on office supplies and I have a 20% overall effective tax rate, I essentially will save $2. $10 times 20%, right? Your tax bill will go down by $2 if that's your tax rate, right? That's how a deduction works. It's going to reduce that taxable income. A credit, however, is so much better in that if you get a $10 credit, that's $10 that you're dollar for dollar reducing the amount of taxes that you owe, or increasing the amount of a refund you can get, depending on which side of the coin you're on. Tax credits are awesome. They're awesome because they're dollar for dollar. It's not, you don't have to take that tax credit and multiply it by your effective tax rate to figure out how much it's benefiting you. Nope. Tax credit, money in your pocket. That's what it is. So that's the great thing. And they're not taxable because it doesn't, how could a tax credit be taxable? That would be silly, right? It doesn't make any sense. The whole point of a tax credit is to lower your tax bill. So tax credits, you want to make sure, if you haven't looked to see what tax credits you are eligible for, I need you to go look at that now. And I've called out a couple of them, and I've done videos on these, and I've linked a couple of these videos above, because these are going to be, in some cases, maybe even better than PPP, right? And you can have these tax credits and get PPP too now. That's another change that they made. So essentially tax credits, not taxable, federal or state, money in your pocket, right? Reduce the amount of taxes you pay on a dollar for dollar basis. So let's talk about a couple of these tax credits. I'm gonna start with stimulus checks. Little known fact, so a lot of you guys, because you've been around for a while, probably know this, but a lot of people don't understand necessarily what the stimulus checks were, because we get a lot of questions. Are stimulus checks, the $600 and $1,400, are those taxable? No, because they're a tax credit, and you just got it early. So rather than, it's a new tax credit, so rather than waiting until the end of the year when you filed your taxes, instead they said, okay, well, we're putting in this new tax credit, and we're going to give that money back to people early, okay? So that's how those stimulus checks work. A lot of people said, well, I didn't get my stimulus check. I was supposed to. You're fine. If you would have qualified, if your income was under the limits and otherwise qualified in 2020, when you file your taxes, you're going to say, nope, I didn't get those stimulus checks, right? They're going to check that on their side, I'm sure. And then you're going to be able to reduce the amount of taxes you owe by that amount, or increase your refund by that amount. Okay, so let's say you would have been getting a refund of $1,000 and you didn't get your $1,400 or your $600 stimulus check. Now you're getting a refund for $3,000. So that's how these tax credits work. So that's the stimulus checks part of it. That's something that is going to just be part of the normal filing of your personal tax return. Again, stimulus checks, nothing to do with business. That goes through your personal tax return. Other tax credits that are big for a lot of people. ERTC, the Employee Retention Tax Credit, or also called ERC. It's really big, you guys. If you employ people other than yourself, if you have actual W-2 employees, you can get for 2020 up to, how much is it? Up to $5,000 per employee. Yeah, $5,000 per employee for 2020 is a tax credit. And in 2021, which is not obviously going to show up on your 2020 tax return, but it's something you want to know about. In 2021, you can get up to $14,000 per employee for Q1 and Q2 of 2021 right now. And that may even be extended. It might be more later. If you don't know what this is and you employ people, I need you right after this is done, don't go now, but I need you to go watch the video that I've linked above about ERTC because it can be a really big game changer. And I walk through exactly what it is and how you would claim that credit and how you would calculate and know whether you're eligible. And there's a calculator that I have. So I want you to go check that out. That might apply to you. Okay. Because remember, that's dollar for dollar reduction in your taxes. And that's something that's done through payroll taxes. So the ERTC, and I'm going to talk about the FFCRA as well, those are done as a reduction of payroll taxes. So for ERTC, you're going to take that on your payroll reports, not on your income tax return. Okay. FFCRA, what is that? That's the Families First Coronavirus Response Act. That is what was passed actually about 2 weeks before the CARES Act. We had the FFCRA, which then got lost with the CARES Act, but it was really something that said if you are sick or if you're taking care of someone who's sick with COVID, you can basically take leave. Or if your employees are sick, you can pay them and get a tax credit for the leave that you're paying them. So it works differently for employers versus self-employed. But for employers, you can take that again as a payroll tax credit. You generally going to take that on your payroll taxes when you're filing your payroll reports. And then if you are self-employed though, and this is kind of the little known fact for self-employed, solopreneur, no employees, you think, well, I can't take that. I don't have any employees that I'm paying to work. You can get it to pay yourself. So this is for if you're sick. This is also for if you're taking care of someone, usually a son or a daughter, but there are some instances where it's broader. You can get paid leave for taking care of a child whose place of work or school is closed. Not if you voluntarily kept them home, generally, but if it's closed. So that for a lot of people, that was my entire last spring, right? So now you can't kind of double dip. So you have to look at, did I get unemployment during that time? Did I get PPP to pay myself during that time? There are some rules around it. I have a video. Go check out that video if you're self-employed specifically and think you might qualify for paid sick leave. You can get up to $15,000 of a tax credit on your taxes. What does that mean? If you were going to be getting a tax, a return on your taxes of $1,000, a refund on your taxes of $1,000, and you qualify for the full amount of the credit, that's $16,000 now you can get back. So I'm telling you, I don't want, a lot of people are going to miss these things, and I want to shout it from the rooftops to make sure everybody who follows me at all knows all about FFCRA and knows all about ERTC, okay? I need you guys to go check out those videos that I've linked because I do think that they are going to be helpful. I have made calculators to help you with it. I do recommend, especially in the case of the ERTC, that you work with someone. I have a recommendation coming out for someone that you can work with. I've been looking for somebody who's taking one-on-one consults because I know a lot of people, their accountant maybe doesn't know about it. Your accountant might still be telling you the old rules, which were that you can't get ERTC and PPP, no longer true as of December 27th. You can get both. But a lot of tax preparers may not be up to speed on that. So I'm looking for somebody and have somebody actually that I'm going to be recommending for consult for you guys. So check back with me on Friday during that stimulus Q&A, and I should be able to release that information where you can book appointments with her, and she's awesome. Okay, so hopefully, again, I will post this whole thing up there. But hopefully that was helpful. I know there are so many things and it's so hard to keep it all straight, especially with all of them moving all the time. So that's what I wanted to help you guys with. I wanted to be able to help you guys to understand how all of these things kind of impacted your taxes, because we're all thinking about taxes right now. Okay, let's see. So I'm not going to answer general questions about like qualifying for PPP and stuff like that. I'm going to look for questions that are just about taxability of these funds. But come back on Friday to ask me your other general questions. And like I said, if you're here to ask about the new changes with PPP, come back on Friday. We'll talk a little bit more about it. There's a lot that we still don't know. There's no official guidance. All we have is essentially a White House press release that tells us what they're changing, but there's a lot of details that have not yet been released. I doubt they'll actually be released by Friday, but I'll talk about where we're at there. So questions on taxability. In order to pay paid sick leave and take the credit, do I have to normally offer them paid sick leave? No, you don't. That is something that you do not have to normally pay them sick leave at all. And in fact, for 2020, paid sick leave is required for most companies if you have under 500 employees, but you do get that full amount of credit back. So check out that video as well. And a lot of the questions on, on the questions on FFCRA and ERTC, I'm going to direct you to the videos I have above because I could probably talk for another 2 hours on both of those things, and I don't think anyone wants to listen to that. So I've already made videos for all of those. So let me know if you have any other questions specifically on the taxability of these funds. And yes, this will be in the group that will, I'll pin it to the top of the group for you guys. If you're not in my group, jamietrell.com/group. And like I said, and I'm going to talk more about this as well. Is there a map list of states that are forgiving the EIDL grant advance? I think my assumption is it's going to follow, I would make the assumption in the majority of cases, it's going to follow the PPP forgiveness, because the reason it just shows you who's conforming versus not, right? And if they're conforming on PPP, they're probably conforming with federal treatment on the other funds as well. There may be some weird state things. You can just Google your state and see if they have something out there about this specifically. You can also Google and see if maybe there's a bill that has been introduced in your state to change especially if they're currently taxable. Let's see. Okay, in our county in Florida, there's CARES Act money available that we applied for, $2,000 for a household, $2,000 for a sole proprietor. I'm not sure exactly what that was. I mean, there's a lot of things in the CARES Act. So if this was, it depends. It depends on what this was. I would look back to see what it was called and then look up the taxability of that thing. But like I said, unless they're specific, if it's CARES Act, most of those funds are non-taxable if it was in the actual CARES Act. If it was through your county, though, if it's a different grant that's not actually the federal CARES Act, which I think there's sometimes some confusion about what's from what, if it's local, that's a different story, and most local grants will be taxable. Yes, I have a preferred vendors list with some amazing bookkeepers on it. I will put, if anybody's on here that wants to put a link to my preferred vendors list on here, that would be great. It is on my website, jamietrell.com. You can go find preferred vendors. If somebody puts it in the chat, then I'll put it up on the screen so you can see what the link is to that. But I have a great list of preferred vendors, and they're all up to speed on all of this because they're my preferred vendors. So of course they're going to be. And then same thing for ERTC, however, most of my vendors I don't believe are currently taking consults that are one-off consults on ERTC. They're doing those with their clients, but not necessarily taking one-off consults. However, I have somebody that's not on my preferred vendors list that I'm going to be recommending. I'll have that information for you guys on Friday. Let's see. All right, thank you, Bree. Bree, who's one of my preferred vendors. Although if you're looking for somebody for taxes, we've got plenty of tax preparers on there. We've got plenty of bookkeepers on there. Definitely reach out if you're looking for taxes specifically. Reach out sooner rather than later because a lot of our preferred vendors are getting very booked up, and a lot of just tax preparers are getting very booked up, especially given the kind of year that it is. So if you know you want somebody to prepare your taxes for you, which I definitely recommend, then I would make sure to reach out soon to get that process started. Let's see. So for ERTC, and again, we talk about this more in the video on ERTC, you cannot use, you can't pay your family. It doesn't count for family members. Email support@balancedcfo.com. We aren't currently taking applications. We are full right now. We put a cap on the number of preferred vendors that we have, and we vet preferred vendors, but as we have openings, we are reaching out to those who join our wait list, but you need to email for information on that. Okay, guys, so I'm gonna try to keep this one a little bit shorter. Let me see right here. So that would be stimulus money, non-taxable federally. So this, I think you were the one that was asking, website only says CARES Act. I don't know what it is, so I'm not sure. I can't opine. There are so many different programs out there. So it's really hard if it's not one of the big ones like PPP, EIDL, if it's a very targeted thing, maybe to your industry or to your state or to your county. I can't tell you for sure, but on here, again, you should be able to kind of Google that or find that out based on the name of the actual grant or whatever you received. But I will share this out for you guys so that you can all find it. All right. Cool, guys. Cool. Yeah. Wednesdays are one of my favorite days too. I love being able to come here and chat with you guys. So, so I will be back, like I said, Friday at 1:30 p.m. Central Time. I'll be taking questions and giving an update on all the stuff that's going on because things are still changing and changing a lot. So I want you guys to be informed to make sure that you can get the most amount of support that you possibly can. That is what I'm here for. So, all right, guys, I'll talk to you guys later and make sure, again, to check out that video on those tax credits that I've linked. There's an FFCRA one, there's an ERTC one. Heck, just go on over to my YouTube channel and check out all the videos because there's a lot out there. Check the date to make sure, depending on what it is, that it's still going to be relevant. But definitely make sure to check out my whole YouTube. My whole repertoire is up there. So if you want to catch up. All right, guys, talk to you later. Bye.